It's about that time of day again. My name is Joseph. Thursday evening, March the 1st. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Starting off tonight on oil, crude is bearish but trading sideways just above the prior week low. That tells me to focus on failures. I'm going to use that two-try rule for selling opportunities up above the highs tomorrow morning. The S&P is also bearish, the big spike and range pattern, one of my favorites. That tells me to look for selling opportunities up above the highs of the triangle, and I'm going to focus on failures for those bears tomorrow. Nasdaq also bearish and trading just above a major support level. So my plan tomorrow is to look for selling opportunities up away from this level of support using the two-try rule, and I get a key level of resistance I'm watching on the Nasdaq for tomorrow. Gold is bullish now, back inside yesterday's range. What a wild ride on the yellow metal today, and of course the strength of this move going higher this afternoon. It tells me to look for buying opportunities with a two-legged pullback tomorrow morning. Euro is bullish, also with an explosive move higher to finish off today's session. I've got a hidden channel and a key reversal line. I'm watching to buy that pullback on the euro tomorrow. And boy, oh boy, do I have a great newsletter in store for you guys and gals tonight. We got some really choppy, sloppy, consolidating markets heading into the first Friday of the month of March. Don't forget, though, before we jump in and put the plan together for Friday's session, I want to remind you guys, if you're on YouTube right now, make sure you subscribe to the YouTube channel. Hit that bell icon. That makes sure you always get notified every time I post a new video. And I'm going to be covering a lot of topics that you may not be familiar with here tonight on the newsletter. If you have any questions about anything we talk about tonight on the video, drop those questions in the comment section below the video on YouTube. If you're here on the blog at sidewaysmarkets.com, this is where all the action happens every day, our trading blog at sidewaysmarkets.com. I'll put the links in the description of the YouTube video. If you're in the blog at Sideways Markets, don't forget to join our mailing list. In the upper left-hand corner, I'll shoot you an email anytime we publish something new here at School of Trade. And while you're here, don't forget, I post exclusive content that you won't find anywhere else on the interwebs on my many different social media channels. Follow me on StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice. I'm always posting important charts, links, and updates throughout the week. And speaking of charts, how nice is this? All the charts from tonight's video, that's right, everything in tonight's video, you can have all those charts ready on your computer for tomorrow, right where it says click here to download today's charts. Grab those charts, have them ready for tomorrow's session. And speaking of tomorrow, what are you waiting for? Grab that free pass, upper right-hand corner. If you're not a member here at School of Trade, I got a free pass for you. Come out and join me as a guest in the trade room, right, and see what all the commotion is about. Grab that free pass in the upper right-hand corner, and we'll see you tomorrow in the trade room. If you have any questions along the way, don't forget, post them in the comment section below or hit me up on live support on the right-hand side of the website. Hope you guys are in a great week so far. It's the first day of March. We got a lot to cover here. Getting ready for tomorrow's session. Goodbye to the month of February. Hello to the month of March. March is a great month. We got daylight savings coming. What else do we have? We got quad witching later on this month, right? None of this, of course, affects us for tomorrow's session, but daylight savings here in the U.S. next weekend. We got quad witching the third Friday of this month. And, of course, it looks like they've pushed back the non-farm payroll number to next Friday. Is that next Friday here? Let me take a look here real quick. We've got 5, 6, 7, 8, 9. Let me go. Oh, apparently not. Apparently, there we go. Okay. Yeah, it is. Okay, so they've moved back. They've moved the non-farm payroll number. Not sure why, but they've moved that back there to the 9th. So next Friday will be that non-farm payroll number. Okay, I want to make sure I check that. Let's see if we can get that here. All right, perfect. So back to the calendar here for tomorrow. So tomorrow is Friday, March the 2nd, and as I was mentioning, I was thinking tomorrow was non-farm Friday, but as you can see, they are not going to be publishing the employment numbers tomorrow morning. So as you can see tomorrow morning, for major news tomorrow, there is none, right? There is no major news on the calendar here for tomorrow, so not a lot to worry about tomorrow. Without any major news, we may see a bit of slop and chop, especially when you see the charts we're looking at here for tomorrow's session. Got a lot of choppy markets here today. Consolidating markets would be a good word to describe these markets right now. So no major news tomorrow. That may have a kind of a sluggish impact on the markets tomorrow. We won't really know more until we get there, so we'll keep an eye on that tomorrow. Anytime I have a Friday morning though, right? Anytime a Friday morning, I'm always thinking early in and early out, and I'm always worried about those prior week open, high, low, close levels, right? These are the two big guidelines or things you want to keep in mind for a Friday morning session. So tomorrow morning, we'll open up our trade room 8 o'clock Eastern time. We'll execute this strategy. And the first thing is Fridays are notorious for being relatively low volume. And as the day gets later, as we get into 10:45, 11 o'clock, 11:30, right, closer to lunchtime, traders start taking bigger risks, and we see volume start to drop off. You know, professional traders, they know better than to trade on Friday afternoon, so they start leaving the market. And then you've got rookie retail traders, inexperienced traders who undoubtedly start taking bigger risks on Friday, right? There's a bit of a kind of a market personality on Friday, kind of late morning, early afternoon, where people start taking bigger risks. You can just feel it in the price action, whether they're up on the week or down on the week, right? People start taking bigger risks. So when you combine that increase in risk tolerance, right? Those being more accepting of risk, and also that lower volatility or that lower volume, it creates this kind of cocktail of unpredictable, irrational price action. And the patterns that you'll see working early in the morning, they don't usually work very well after lunchtime settles in on Friday morning. So just be aware of that tomorrow. My cutoff is always about 10:45, 11 o'clock on Friday morning. I always like to get to my trades early in the day, and then, of course, finish up the session, right, head to lunch, and enjoy the weekend. So early in, early out on Friday mornings. You're more than welcome to hold trades into the afternoon, but just be careful getting into new positions, taking on more risk on Friday afternoons because of what I described earlier. Now, big thing for today, we got a lot of this to worry about tonight. Prior week open, high, low, close levels. Kind of the word of the night tonight is consolidation, because you're going to see in a moment the charts a lot of them are really consolidated. We've got the gold and euro making some really crazy moves back into consolidation, and a lot of them are bouncing around these prior week open, high, low, close levels, right? We talk about this every Friday. Anytime we go to a Friday session, it's last week's open, high, low, and close levels, and they oftentimes become price magnets, and we get a bunch of those. We're watching the market kind of bounce around those levels as we speak right now. So we're going to be keeping an eye on those tomorrow. We get a couple of them that are going to be concerning, and we get a couple of them that can be used as excellent targets. So early in, early out tomorrow, prior week open, high, low, close levels. No major news tomorrow, and there's no non-farm payrolls scheduled for tomorrow either, right? Unless they pull a switcheroo on me here. I've got the non-farm payroll numbers scheduled for next Friday, it looks like. From what I can tell right now, they have that published here right on Econo Day. So no non-farm Friday tomorrow. We'll come back and obviously that for you next Friday ahead of that daylight savings time weekend. All right, so now you guys know the basic schedule here for tomorrow, or the lack of news for tomorrow. Let's jump into our charts and let's get ready here. Now, as I mentioned earlier, a lot of prior week levels and a lot of feeling of consolidation. You know, consolidation being kind of a key word here going into tomorrow's session. Starting off with oil, then over to the S&P, down to the Nasdaq, gold, and we'll wrap up on the mighty euro. Crude is bearish, but the sellers have tried twice to retest the low and don't appear to be getting anywhere fast. The sellers are struggling to move lower, right? But the buyers, they haven't taken control yet either. And that tells me it's too early to start buying, right? But I really don't want to sell here at this point. So I've got to sell high, right? We're seeing clear rejection at those lows. Clearly get that prior week low staring us right in the face. So it's too early to start buying. I don't want to sell into that prior week low. So until this market turns bullish, I have to focus on selling as high as possible. I'll try to get up above some of these prior swings using the 2-try rule, right, and get this thing back down to that prior week low. As you look at this chart here on oil, this is going to look pretty familiar on the next couple charts here as well. You'll notice, obviously, we have this, right, this bearish move going lower, right? Bear move going lower. Today we had a very small short-term bear channel to finish up the session, but you'll notice here, right, the bears tried once to retest that low, they went higher, tried twice to retest that low, and normally once you see the sellers try once and then try twice and they're unable to get back down to retest that low, sellers aren't going to have that long of a leash on this anymore, right? So at this point now, sellers have to be thinking, boy, we tried to sell the first pullback, we went higher, got a higher price, right? Trying to sell the second one, that didn't work. At this point, we are one blast higher away from being a bull market right now because sellers here are trying and they're failing. The problem is we don't have that blast higher yet. You're going to see what a blast higher looks like on the gold and the euro in just a few moments, right? This is not it because we know we need to see strength, pullback, and then strength. We're not seeing that strength going higher. This is not a bull market yet. It may become a bull market tomorrow, but we're not quite there yet. I can kind of read between the lines here right now, and when you see the S&P, you'll see kind of how the S&P might be a little bit of a leading indicator here. But if I draw some trend lines down overhead, right, you can see how this kind of starts looking like a range. It's not a great looking range, right? I think this is a better looking range right now because we have double tops, we got double bottoms on it. But we're definitely bearish with a bit of a range environment here right now. We're right above that prior week low, and you can see, right, it's definitely acting as a little bit of a floor here for us right now. That prior week low acting as major support. Going into a Friday session, we may not get very far away from this prior week low. We'll have to see what the day looks like tomorrow. But as of right now, here's what we do know. We know we're bearish. We know we're not bullish. We know there's either a triangle here, which I'm not quite on board yet with, right, or a trading range, which I do think is a more reliable pattern to use. So anytime I have a trading range with a bear, right, with a bear trend, I know my only strategy here really is a 1-try, 2-try, and then back down in. So that's the plan here for tomorrow, right? So looking for that 1-try, 2-try, back down in. Now, as I always remind you guys, if you want to go against the trend, it is an option on a range-bound market. I would recommend using a smaller position size for it, right? So 1-try, 2-try, and then back up in. Remember, what I always like to do, though, is I always like to see that second try go higher, right? Notice how the first try and second try, notice how those are higher, right? The second try is higher than the first. That's what I'm looking for here. 1-try, 2-try, right? And then back down in we go. The downside, 1-try, 2-try, right? And then back up into that range. Stay away from the middle of this range. I'm going to keep an eye out here, right, for a triangle forming here tomorrow. Again, you'll know it's a triangle because it'll rotate like a triangle, right? If it's a triangle, it'll go up and then down, and then up and then down, right? So we're not getting that rotation right now. We're getting rotation instead of this little trading range. So 1-try, 2-try, back down in, 1-try, 2-try, back up in. I'd rather be a seller than be a buyer. And then how do we turn bullish? This could easily turn bullish because you'll notice the sellers are really getting stuffed right at that prior week low, right? They're being rejected down here. So if it does turn, right, if we do see it go 1-try, 2-try, right, big break higher, I'm going to start trying to line up some of these guys, right, for a hidden channel, right, and we'll grab it, right, we'll grab it from there. So we don't really know, kind of how it's going to work out tomorrow, but I know one thing's for sure. We got to see a strong blitz higher, right, and that will send this price bullish. And if that's the case, we have a really nice opportunity here. We get some big milestones at that prior high overhead tomorrow. So this could end up being a very good day for the bulls tomorrow. But unfortunately, right now, we just simply do not have enough information, right, to do more of that. So again, 2-try rule above, 2-try rule below. I don't want to say it's probably going to go sideways tomorrow, but that's kind of how it feels right now with no major news. I hope I'm wrong. If we do end up making a run back down to that low, if we do end up down to that low here, beware again of that 1-try, 2-try back up. I'm going to really have to see a lot of strength going lower tomorrow if I'm going to get on board selling low here, because we've already seen the 2-try rule. We know the prior week low is right there. The big round number is right there at 60. So, it wouldn't surprise me if we see a knee-jerk reaction here, down 1-try, 2-try, and then end up back into that range after tagging that 60. So just be really careful selling as the market goes lower, right? If the bears want to take it lower, they would have already taken it lower here earlier on today. So it's definitely a challenging environment right now. Not an easy, clear direction, but not a real easy, clear area where we can sell if price goes lower. So we really got to see some strength going to the downside before we can get on board with that tomorrow. So sell high, keep your eyes open for a possible reversal. I hope we do, because that would make our job a lot easier. But right now, I can't put my money on my money on the long side right now, because we're not bullish yet. So we'll stay tuned for more on that tomorrow morning. Again, we'll see. And then look at the S&P. The S&P might just be the mirror into tomorrow's session for a lot of these markets here. As you can see, this, right, is a triangle. You can easily see those rising support levels, easily see that falling resistance, right? The S&P is bearish, right, with a spike and range pattern, and that tells me to focus on failures up above the range high, avoid the middle, and watch for seller failures, right, and buying opportunities off the low tomorrow. So kind of an interesting scenario here, right? We began the day today pretty much inside of a range. We may end up back inside that range tomorrow. We'll kind of have to see what happens here. But right now, leaving that range this afternoon, we saw that strong move down, held the pullback. So as of right now, I don't really have any reason to think we're going back into that range, except for just the overall feeling of this market. And when you see the euro and the gold, you'll see kind of what I mean by that feeling of the market right now. But as of right now, we may end up back in that range tomorrow. If it does happen to jump up, that's where it's trying to go. But for right now, though, strength, pullback, strength. I've got this is a bear market, strong move down, right, for the bears. And then you'll notice here again, right, 1-try, 2-try here for the bears. We're drawing that trend line up, right, drawing that trend line down. Again, it's not bullish yet. You know what I mean? We're definitely bearish, but I do not want to try selling into these support levels. I do not want to try selling right down into that low, because that's where we can expect buyers to be coming in. So what do we know right now? We know we have a bear market. We know we have higher lows and lower highs. We know we get a flat moving average, so we're sideways. So that tells me right away this is a range, and we should look for, right, those range breakout failures. At the same time, it's pretty easy to see. There's your prior week low. That's a big factor for tomorrow. And then we have this reversal line here, which is just below that measured move, just below that 2,700 big round number. So we got a couple things here we're watching here right now. Also, we definitely have potential here for a hidden channel, right? Drawing this thing up kind of like a hidden channel here. That may help us for that sell tomorrow morning. So the key component right now is the range. Anytime I see a trading range with a bear bias, I know my goal is to go up, 1-try, 2-try, right, and then back down into that range, making sure to get away from this rising support level. As I mentioned earlier, you're more than welcome to be a buyer in this market, but I would recommend being a little bit more disciplined with your position size on that, right? 1-try, 2-try, and then back up into that range. Again, I would recommend, if it was me, I'd be taking a smaller position size on that, just because it is counter to that trend. Let's see here. Stay away from the middle, right? Stay away from that middle area. That will be the most difficult, because you've got support in the way, you've got resistance in the way. Get up, 1-try, 2-try, and back down, right? Down and back up. If we do go sideways here, we're going to stay patient here for tomorrow. How would this break higher here? Again, we're sitting on top of that prior week low. You'll see the gold and the euro in a moment, and you'll see what that looks like in a moment. But basically, if we're going to go back into this range, we're going to have to show some strength, pullback, right, and strength, right? So we're going to get that moving average up, strong move up, pull back, and go. If that's the case, then now we have potential here for, right, kind of a hidden channel there, right? Buy that pullback with that hidden channel and go from there. You know what I mean? That's what we're looking for tomorrow if we do get that break back up. And the goal of that will obviously be to get back into that trading range. If it does reverse and go higher, the trend will be so strong to the upside that even though we're going to be back inside that range, we'll likely be able to buy that pullback and ride momentum higher, just as it almost has a pendulum swing, right, going back up into that range for tomorrow. So, again, the word right now is consolidation, right? A lot of consolidation happening around that prior week low. And again, bear market, but we're in a range right now. I can't call it a bull market yet, although I really don't like the picture of being a seller right now. I'm going to focus on traps, focus on buyer failures, focus on both for crude and the S&P get up, right? So we can sell it back down, right? Until of course it goes up and then keeps going, right? And once we see that, then we know we're bullish. And if that's the case, right, we'll then look for that hidden channel, right, off of that high and look for that buy, right, on the opposite side. So really right now it's the waiting game here. Either we can sell above those highs, right, or be a buyer if the market, right, turns bullish. Now, I would think probably the most difficult chart of the day is this Nasdaq. The Nasdaq looks like a train wreck. It's obviously bearish, and we're clearly trading at the high of a channel. And those channels, right, they always tell us to sell off the high, but look at the measured move. Right, this measured move is clearly acting as major support, right, driving the bears nuts right now. So I need to stay patient for selling opportunities using the 2-try rule up in the battle zone tomorrow morning. Now, I have to tell you, we see this all the time. This is one of those specific scenarios that you have to just memorize. And you'll notice what happened. It went through a measured move and then popped right back above it. So I want you to follow this because this happens all the time, and it oftentimes results in a full trend reversal because sellers get kind of boxed into a corner and they really can't do anything with it. So obviously we have this big measured move down, right? Big measured move down. You can tell, right? You can tell that was a very important part of the puzzle. I wouldn't argue with you if you said the prior week low was the reason, but you can tell though they kept getting stalled out here, right? Not at the prior week low, but at the measured move. In a trending environment, measured moves and channels, at least in my experience, are some of the most reliable and simple ways to find great support and resistance. I'm not going to say that the only way to do it because you and I both know it's not truth, right? But they are easy to use, they're easy to learn, and they're easy because everyone can see them, right? So big strong move down, pull back, goes through. So that's your measured move. What I want you to see though is that we go through the measured move. Okay, that's the first thing. We go through the measured move. Okay, that support level, we then go back above the measured move. Okay, now this is where it gets, this is the most important part. Now, once we go back above the measured move, you'll notice, right, the bears, they tried once, and the bears, they're now trying twice to retest this low. Remember, the sellers are trying to get back and retest the low, right? Anytime we have, right, a strong move down, we know 1 try, 2 try, back down to retest the low, right? If we keep going through the low, we keep selling it short. Okay, so right now, down to that low, pulled back, tried once, right? Pulled back, tried twice, and what's happening is the measured move, it keeps getting in the way. So now put yourself in the shoes of the sellers. Last night on the newsletter, we talked about the psychology of a spike and channel pattern and why I love spike and channels. Put yourself in the shoes of somebody who sold here and sold here. If you don't see this market going down to that low to get your target filled, and we start going higher here now, what are you going to do? Are you going to wait and see if it comes back down again? Probably not. If I was short, right, if I was short off that last trap high up here, right, and I'm seeing this thing once, twice, and it can't get down to retest that low, and I know I have support here, the minute I see this thing start to run higher is the minute I'm getting the heck out of that position, right? Sellers become buyers. Buyers can smell this reversal. Okay, it can't be a buyer yet. This is what we talk about, right? You got to know at what point can I safely become a buyer. You got to see more proof than we get right now, right? Right now, we don't have that proof yet. But we have those sellers boxed in right now, right? They're boxed in. They can't sell, right? They already loaded the boat up. They tried once, they tried twice, right? They're clearly seeing this level act as resistance, as support. right? They've tried to sell off that high. So at this point, the only option for those sellers, right, is to try to fool the buyers, which means they've got to go up, right? Let those buyers try, and if they fail, we can then look for the sell back down again. So sellers are really boxed in right now, right? There's too much support below them. They're trying to get this thing to move. I would assume right now, based on this one, this one, this one, this one, I would assume there's a lot of bears right now that are in this market. And if it starts pushing higher on strength and can hold a pullback, this could easily be a bull market tomorrow. I know I've talked about this a lot tonight, right, that we have potential for a reversal. We do. This is a great example. It's going to be really difficult for the bears to get anything going here tomorrow. What do we know? We know we're bearish. What do we know? We know the sellers have tried twice. We know there's a measured move down there at 24 3/4. So just like I talk about on oil, right, I can't go being a buyer yet until I see a strength, pullback, and strength, right? I've got to run these bears out, and then we can start looking for that new bull channel. Then we can be a buyer going higher here. Because I'll tell you, I have seen so many times in my, I haven't been doing this for a long time. There are traders that have been doing this for 30, 35 years, right? I have a decade under my belt. I think it's long enough to know the difference between when it's bullish and when it's bearish, right? But I have seen so many times where I can just smell a reversal, but the momentum of the market just won't let it reverse. So be very careful trying to predict reversals, even when a market like this is kind of boxed into a corner. They can't really do anything to go lower, right? I still want you to wait for that jam higher, right? And then once we see that strength, then we start looking for that buy, right, going higher. So sell side, I want to see this momentum continue to hold here. I want to see it go up, hold or fail to hold that pullback, right? Run lower and then grab it off that low. I'm going to be looking for that sell. That'll be the more reliable sell tomorrow. It's going to be a little bit tough up here because I would guess there'd be a lot of buyers trying to call this reversal right now. So I'm not going to try to mess around that prior week open, that purple line. I'll wait for it to go up, get back below that moving average, show me momentum is still there, and then try to ride this sucker right back down from there. I have zero interest in selling down between that measured move, right, and that prior week low. And that also tells me if we do go lower, one try, two try, this is where, if you like wooden roller coasters, hot air balloon rides, skydiving, right? If you enjoy a little risk in your life, right, you might want to go in, right, and look for a little nibble there off the low, right? Seller failure off of that low. But again, as I always remind you, if you're going to go against a trend, right, keep it close to the vest, right? Small amount of risk, big amount of reward, smaller position size, right back up. Right, so I know I'm taking some time here to explain this because this is a tough one. This is a real tough one. Up, one try, two try, back down in, sell the rip, right, going back down in. That way we have buyers roped in, right? If it does roll over, one try, two try, and then back up in, or right, strength. If my gut is correct, this thing won't be, it'll be so obvious when it goes higher, right? If we see this thing just rip higher here, right? If it just rips higher here right now, it's basically a short covering rally. Just grab that, right? Grab that hidden channel, right? Look for that pullback, right? And we get a big target. Got some big targets waiting there overhead for the bulls. Don't be surprised if we get stuck kind of going sideways here because, again, the bears are boxed in. It's not bullish yet. Buyers can't quite get too eager to be a buyer, but sellers won't want to sell yet. So just kind of watch out for that consolidation, right? Consolidation here for tomorrow. So interesting scenario here where, again, we go through the measured move. We then pop back above it. The bears are trying to sell at resistance. There's too much support. And then oftentimes, right, blammo, it jumps up, right, get that reversal, right, and we're off the race at the upside. We haven't seen the jump higher yet, right, so we are waiting on that, but it is definitely on my radar screen for tomorrow morning. Let's keep going. Over to the gold now. Now this is what, right, this is what a short covering rally feels like. This is what, right, a huge run higher feels like, right? That straight line up, all the bears get out, right? Now you can see what I was talking about earlier, right? This is what it looks like when the bears give up. right? It literally just says goodbye and runs higher. So gold is clearly bullish now, but you'll notice we're right back into that range from yesterday after this late session short covering rally. The strength of this move is the big clue. Okay, it tells me that we're definitely bullish. This is not a bear market. We're making a higher high on the day right now, right? What is really interesting about this gold is that the high of day was the very first candle, right? And then it came almost the last candle of the session made a new high. I can't think of the last time we saw something like that. Right, where the first candle of the day was the high of day until the very again, not the very last, but almost the very last candle comes all the way back and makes a new high, right? So of course, if you were to look at this in a daily chart right now, right, a daily chart would look like this, right? It would actually be a little tiny sliver, right, of a green candle. That's what a daily candle would look like, right? Right? So of course, right, that high here, it would open up here, right? It would open up here, right? We go down, right, back up and then come back down, right? So it would end up, right? It would end up as a red candle there with a huge wick on it, right? With a huge wick on it. So about as close to a green candle, right, as you can get, considering the fact that it closed below that high. The bottom line is, I'm obviously rambling here right now, but the bottom line is the strength of this move going higher, right? That is the big clue here, right? So buyers have control. They roll, right? They roll higher here. I'm grabbing that, right, that high, projecting it off that low, and looking for a buy off of this low. Now, you might be worried about this trading range, and so am I, right? This trading range is definitely on my radar. You know, we talked about this last night, 1 try, 2 try, right, and then back up into that range. Well, now we have a huge potential here for a pendulum swing, right? So the amount of the move lower, right, the amount of that move lower, put that up overhead, right? That's your pendulum swing, right? So here was the balance, right? The consolidation from yesterday's session. We roll lower, right? There's potential now. This market could continue higher on that momentum and keep going. So what I'm looking for here is I need to buy low. I don't want to trade inside this range here. Strong move, right? Strong move higher. Draw those 2 trend lines here. Find that hidden channel. Looking for a buy. I've got my reversal line there at 13.9. Combine that with the top of that, or the bottom of that hidden channel, right? And that will make for an excellent opportunity here. If we keep going higher, right? If we keep going higher here, I'm going to do the same thing, right? I'm going to keep looking for that hidden channel. I'm going to keep looking for that buy here and try to ride that momentum, right, through up to that prior week low. And that prior week close at 1330.5 is a very, very attractive target because it puts you right underneath that pendulum swing. And of course, as we close this week, the prior week close would make a very sensible, right, resting place for the weekend. The only concern I have is this range, right? So just keep an eye. If we start sitting sideways here inside this range, right? In other words, we're not seeing that momentum come down and give us a chance to buy through it, right? If we just kind of roll around inside this range right now, we want to go using that 2 try rule, 1 try, 2 try, back up into that range. If we keep going sideways, right, we definitely know we're going to start balancing out, 1 try, 2 try, back in. So I want to ride the short-term momentum right now off of that low, but if the momentum kind of gets snuffed out a little bit, right, if it gets comfortable inside this range, you know, if we come in tomorrow, 8 o'clock, 8:30, 9 o'clock, and we're still going sideways, the momentum of the market will have been, you know, kind of silenced out there. 1 try, 2 try, back in, 1 try, 2 try, back in, and we'll basically look for the same strategy that we talked about from last night's newsletter. So right now, looking to ride momentum going higher here on the gold. Look to buy below the low of that range. That will definitely be the easiest path to success. And then hopefully that prior week close, we can leave a runner, a nice big runner on that move forward tomorrow. And then obviously, if we can get up around that prior week close here, up around that pendulum swing area, then we start watching for that 1 try, 2 try, and we'll look for that move back down into the range towards the end of the session tomorrow. It's a short session because of the Friday session, right? And then on Friday, you're definitely get a short session on Friday morning, but hopefully get a chance to at least participate a couple times right on the gold tomorrow. Let's see here, from one big strong move over to the euro to another one now. Now the euro really showing some potential here. Euro is bullish, trying to make a run back into the range from earlier this week, and this explosive move higher is telling me to use a hidden channel for the most reliable buying opportunities tomorrow, again on the way back up into that trading range. Here's that trading range we found earlier this week. If you recall, it was the Fed chairman, right? It was the Fed chairman speaking on Tuesday and Thursday this week that sent this price right running lower, and it was a very, very easy job selling the high of that spike in channel here this week. But now, as you can see, we're starting to give back some right strength, pullback, strength. This is what the Nasdaq, this is what the S&P, this is what the bulls need to find on the first few charts we looked at tonight, right, in order for us to be confident in this bull market. Right, so we're looking at a bull market right now. We have that trading range just staring at us here. We're back to the prior week low. That's not that big of a surprise, but there's that prior week close, right? Gold has a prior week close above us. The euro has a prior week close above us, right? What was it here? The Nasdaq, right, has that prior week close above us. So we definitely have a big carrot at the end of the stick there for those buyers tomorrow. Again, as I always recommend, anytime we see that reversal, draw out those highs, pin it down to that low, and this could be a very shallow pullback here. I have the battle zone off that reversal line and that prior swing, but that will definitely be where the short-term buyers will be looking for this right tomorrow. If we do get that short-term bull move going higher, right, and we continue inside this channel, then look for that two-legged pullback, right, and up from there, right? So short-term pullback, then two-legged pullback to make sure we don't go buying too close, right, to that trading range, and let's go back into that range there for tomorrow. We may also go sideways here. This is a purple line, right? It is a prior week level, so keep an eye out for it going sideways in the overnight session. That will give us a bull bias with a sideways range. That tells me to buy below that low. One try, two try, right? Buying down below that low. That would be, of course, the plan if it goes sideways. And you'll know it goes sideways when we have a double top, right? So if we end up pulling back, right, and this market can't go make that new high, that will tell you we're now inside of a range. Then we look for that two try, look for that buy coming off the low of that range, right down, hopefully inside that battle zone here for tomorrow. But I definitely like the idea of being long here on the euro. I'm just waiting for a good way to enter the trade, right, going back up into that range. And I definitely have my eyes on that prior week close for tomorrow. Well, I'll tell you, it was a great month of February. Hope you guys had a great month. It's been a great week so far. Tomorrow, right, we got the Nasdaq boxed in. Right, so got some potentials for reversals, but we need to see some strength. We need to see some proof, and that really is kind of the name of the game here for pretty much everything except for the euro and the gold tomorrow. So keep your eyes open. Remember, it's early in, early out tomorrow morning. If you're going to be joining me tomorrow, our trade room opens up at 8 o'clock Eastern time. Don't forget, if you join our free trial, I'll shoot you a free pass. Come out and join me in the trade room, so grab that right on the homepage of our website. If you're on YouTube right now, I'll toss all the links in the description of the YouTube video. And while you're here on the website, don't forget our beginner course, intermediate, and advanced classes are the very best in the business. We get a place for everyone to start their career, whether it's a beginner, intermediate, or advanced member. And don't forget, if you have any questions, you can drop them in the comment section below YouTube, right on the blog, or hit me up on live support on the right-hand side of the website. I'll be there to answer your questions, right, at any time you need me. Friday session tomorrow. Be there early, get out early, grab that money, and enjoy your weekend. If I don't see you guys tomorrow morning, have a great weekend. Be well out there. Be nice to each other, will you? My name is Joseph. Be here next time. Adios, amigos. Bye-bye for now.